Hi, today we'll be discussing buy-to-lets and what the minimum income is for a buy-to-let property. Hello, welcome back to our channel and podcast. My name's Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftika joining us again. And for those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 10 years. He's also one of the founding directors here at WIS. Hi, welcome back Ifti, how are you?
Hi, I'm well, thank you. How are you, Gemma?
I'm very good, thank you. So today we're going to be talking all about the minimum income requirement for a buy-to-let mortgage. So why don't we start with kind of the basics? What is a buy-to-let mortgage for those of our viewers that don't know?
Yeah, a buy-to-let mortgage is where you buy a property for investment purposes, where you buy a property and rent out, right? So usually you rent it out to an individual or a family. So that's known as a buy-to-let property, or when you get a mortgage on that, that's a buy-to-let mortgage. So these properties are primarily for investment purposes. It is not for you to live, but it's for someone else to live, right? So generally the person who owns the buy-to-let property owns their own residential property and they let this out. So that's called a buy-to-let mortgage.
Thanks, Ifti. And how does a buy-to-let mortgage work for those of our customers that don't know?
So the buy-to-lets work slightly different to a residential mortgage, because on a residential mortgage, they do something called an affordability calculation. So with the affordability, it's mainly based on your income. So if you're earning, say, 50,000, 30,000, 100,000, whatever it is, your affordability is mainly based on that. Of course, there are other factors they look at as well. But with a buy-to-let, it's different, right? With buy-to-let, affordability is not what they mainly look at, right? Because they mainly look at how good is the investment property, right? So they look at things like what is the rent you're going to get out of the property, what's the deposit you have, what's the potential of renting out that property in the area, whether it's worthwhile, right, for them to do that investment. And also they do something called a stress test, right? So the stress test mainly looks at what if the interest rate goes up? What if there's no tenants, right? So they look at those things. And generally you need a deposit of about 25% to put down. On a residential, there are deals which start from about 5% deposit, but on buy-to-let, majority of the lenders will want 25% deposits. On and off, we see lenders who are okay with 20%, subject to you passing that stress test. So that's the main difference. So it's not really based on affordability as such, but they have a separate set of rules for buy-to-let. They have a buy-to-let calculator, but it's different to a normal affordability calculator.
So let's get to the question that everyone's waiting for. What would be the minimum income needed for a buy-to-let mortgage?
Okay, so most banks will start at about 25,000. So let's say if you go to buy a residential property, I'm just using these numbers because of ease of calculation. If you're earning 100,000, most banks, assuming you don't have other financial commitments, will let you borrow about 4.5 times your income, right? So if your income is 100,000, you can borrow up to about 450,000. But if you're doing a buy-to-let property, they don't expect you to earn 100,000 even if it's a 450 property, because what they're expecting you to do is to rent it out, right? So generally they expect the rent to cover the interest that you pay on the mortgage. So with that, even if somebody was earning, say, 30,000 or 50,000, you're likely to be able to get that mortgage because it's for an investment purpose and it's not for the purpose of you living. So the way it's calculated is different. So if you look at the minimum income requirement, a lot of banks will have a requirement of about 25,000, right? So that's kind of what it is. It varies from banks to banks. Some banks will say maybe 30, some will say joint income of 25, if it's a joint application. So each bank, the answer will vary, but a lot of banks will be comfortable with a 25,000 income. That's kind of the minimum.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
Can you get a buy-to-let mortgage with no minimum income requirement?
The answer is yes, right? But of course, you can't just read into it that way. You have to look at it in detail. There are some banks who says there's no minimum income requirement. Doesn't mean that someone who does not have a job will get a mortgage, right? A buy-to-let mortgage. I mean, it doesn't work that way. So they just say that, look, there's no minimum income requirement, right? So what that means is, obviously, the primary thing that the banks will look at is whether, if there's nobody in the house, whether you can fund that using your other means, right? So either you have a pension income or you have some kind of income, or some people who are like new contractors, right? A lot of banks don't look at them because they don't have trading history, right? So for those new contractors, this might be a route, right? Because what happens is, they can't prove their income yet because they're only a new contractor, but we know that they are going to be earning a lot of money, right? So for people like that, it works. So yes, there's no minimum income requirement, but the bank will want to see how are you going to live and how are you going to pay the mortgage just in case there's no tenants in the property. So they will do that check for sure, right?
Yeah.
So there are some banks who say there's no minimum income requirement. It doesn't mean that your income should be zero, right? But they will always want to see how you survive as well.
Yeah, all right. Thanks, Sifty. Now, are there any things that our listeners and viewers should be mindful of when they're purchasing a buy-to-let? Perhaps the price of the property? Do any of these things affect whether they'd get a mortgage?
I mean, back in the days, a lot of lenders said, look, if you have 25%, you can get a buy-to-let mortgage, right? Deposit. That used to be the main rule, right? Obviously, they look at your income, but that was mainly the criteria that most lenders had. But those rules have changed quite a lot since, right? Banks do something called stress testing. So it's very important that you pass your stress test. They look at whether you're a high taxpayer or a basic taxpayer. Generally, high taxpayers are worse off compared to a basic taxpayer. Then they look at it whether it's a longer term deal or a shorter term deal. Longer term deals generally work better than a shorter term deal. They look at the rental, how much you're going to get as rent, because obviously they'll want to see the interest being covered, plus have some extra, because in case there's no tenants, you should be able to cover it, right? So also they look at things like, what if there's no tenant, right? So a lot of banks assume that the house will not be occupied for about 25% of the year, right? So they only expect tenancy for 75%. So they look at factors like that, and they do something called this stress test, right? So stress test varies from bank to bank, but these are some of the main factors they look at, right? So yes, you need a 25% deposit, but that doesn't guarantee that you will get all the money you want. If you fail on the stress test, you may have to put a little bit more money, right? So I think with buy-to-lets, it's always best for you to do these checks before you apply, because like I said, stress tests may vary from bank to bank, right? One bank will say we'll give you a little bit more, one might say might give you a little bit less. So you just need to make sure you pass that as well. So things have changed in this space, so do speak to an advisor on this.
I've had a few customers recently that have been looking to purchase properties that are worth under 100,000. Why might that be a problem with lenders?
Yeah, I mean, again, it's the bank's choice what they want to lend the money on. They have a minimum flow level, right, as they call it. The reason why they have these flow levels are irrespective of whether you borrow 500,000 or you borrow 50,000, the bank generally has to do the same amount of work, right? They got to send a value in, underwriter's got to look at the application, they got to pass through the whole process. There's overheads attached to that. So if you look at it that way, for it to be worthwhile for them to take on a mortgage, it has to be of a particular size, because otherwise it's not worth from a bank's point of view. So that's one of the main reasons why banks have a flow level, right? It's a cutoff level, because beyond that point, it's not really worth for them to do the transaction. Because obviously, bank is a commercial establishment as well. The objective of many commercial establishments, one of the main objectives is to make profit, right? So obviously, the product has to be profitable for them. So that's why they generally have a flow level.
All right, thanks, Sifty. Do you have any other points you want to add today?
No, I think buy-to-lets, has evolved quite a lot, right, over the last few years. Obviously, with these stress tests being introduced, things have been a little tight for a lot of people. But at the same time, there are some banks who are a little bit more lenient than the others. We find that sometimes there are banks who do something called top slicing, right? So if the stress test does not work, they look at your income and say, hold on a second, stress test doesn't work, but the guy or the lady has so much additional income, they can cover if there's no tenants. So they sometimes look at it that way as well. And of course, we have the limited company structures, right? So with limited company structures, it's a little bit more lenient, the stress test, right? So that seems to work. And as I mentioned before, sometimes longer term deals work. So if you speak to an advisor, they generally know about these things, right? So, if you're struggling to place your application with a particular lender, there may be other alternatives out there.
And I know this isn't directly related to sort of income, but I would say, because obviously everyone watching this is interested in buy-to-let properties, that the EPC certificate is becoming more and more important. So I definitely would check what the EPC rating is so that you know, because I think there's some new rules and regulations coming in which will affect EPCs that are sort of anything from D and below. So it would be good, right, to just check that if you are thinking about purchasing a buy-to-let property.
Yeah, definitely. I mean, there are even now the EPC levels aren't as strict, but if you fall below a certain level, the bank won't give you a mortgage, right? So that's there. But I think in future, because there is a massive change towards being greener in terms of houses, so there's a massive drive from the governments. Obviously, that's why the banks are supporting this massive green initiative, right? So with these green initiatives, the lenders are going to get tough on the EPC rating. So yes, watch this space. It is coming, right? So if you're thinking of investing in buy-to-lets, it should be a big consideration for you now, right? Or if you're thinking of your deal finishing, if you don't have the money, it might be a good idea for you to raise some money to do that work, because the rules are coming, right? And the banks might just stop saying we are not going to lend for people who are on an E-class or whatever it is, E category. So you have to be a little careful on that one,
Definitely. All right. Well, thank you, Ifti, again for some more great advice. I just wanted to put our regular reminder out there that these points may or may not be applicable to you. So if you're unsure if they're suitable for you, please do speak to an advisor. And if you don't have an advisor, I will leave our WS contact details below, as we're always more than happy to help. Another little reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.